Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Monday, November the 13th, the year's 2023. Let's talk trading. Weekly open and gap with Walmal. He's going to join us in a few minutes. These videos are for educational purposes only. Your results may differ from mine and from Walmal's. And as always, let me remind you to always remember and never forget to never lose more on any one single trade than you're willing to lose. Risk management. Okay, looking at the weekly, we can see we are 27 pips above the weekly open on the pound. And taking a look at the dashboard, you can see that all those weekly gaps have filled. If we zoom out to the monthly, we're 86 pips above the monthly open, 197 off the high, 136 off the low, and we are in the upper wick zone of the previous month. And looking at the daily, we are now putting in the opening range for the day, which looks like about 49 pips, so there's room to grow, it looks like. And it also looks like we're in the upper wick zone of the previous day's candle. For the year, we're just 144 pips above the open. It looks like we almost touched that yearly open. We're above the inside bar that happened 16 days ago. And you can see there's a lot of inside bar action here, on a lot of blue and gray. So for you inside bar traders, looks like today and this week might be a good time for you. And it looks like we've got 50 pips of range here on the pound dollar, but only 3 pairs over 100 pips of range. Very muted day so far. Buy zone, once again we had a gap down. That gap was filled, and we really haven't looked back. And here's Walmal joining us. I got a few more to go over Walmal. We are coming out of that upper rat zone there at the 35, 22.35. So red rats are enjoying a feast, but caution because the range is still too low. We usually like to see 60 pips of range. Pivot trading plan, near R1 bias is short. It's paying off the 46, which just so happens to be the open of this H4 candle. We've taken out the daily pivot. We still have to hit the weekly or shoot for the weekly at 22.80. And we've taken out the monthly pivot. And looking at H4, we above 22.74 and below 21.34. So you have to pick your direction there. We are back into the upper wick zone here. And so far, oh, go ahead.
I went long at a flip-flop box on the previous candle, so I went long at 36 even.
Yeah, because you had just gone short at 35.
I had.
So, looking here at M30, we broke out of that previous M30 low, and we're right at the previous M30 low, and almost the last two and M30 lows. We're at that H1 low. Notice we've got at least 10 pip range on the this last 4 H4 candles, including the current one. And we put in a 3 ball just 4 candles ago. on the bottom, that is, which we had a M1 lower high at 22.32. For the month, we haven't extended the range since July. And looking at the trade reminder here, we'll start with the daily prices turning up. Buyers strong control. We have a higher high and a higher low so far. And we take a look at the weekly. We've got prices between the wick zones right now. So we're coming out of that lower wick zone, and the fade to pivot buy to 22.80. And coming down to, or actually, let's see, to the monthly, we price inside the upper wick zone and we crossed above the previous mid. So that's it. So Walmal, how's your trade doing?
I'm underwater right now. I had a half pip, but didn't hit my TP, so I stuck with it. We'll see what happens. But it's been the type of trading today where there's been a lot of choppiness, and get yourself into a bunch of trouble here because I was mentioning to you, I don't know how many pips I've got. I've had to pay in commission because it just trades that were legitimate trades to take and just would just chomp you today. So I mean, I've made my core for the day, but it's been a rough day, to be honest with you, to go and do that. My efficiency is sitting here like about 65% or something ridiculous like that, which I never ever have. But you know what? There are days like this, and you know, you guys sometimes pay to play.
Yep.
So I mean, I'm sitting here now. I'm actually underwater by about 4 pips, and if it goes and breaks, right now, if it breaks the area of about, like right here, I'm out. So took a 5 pip loss on the deal. But you know, that's just trading. Sometimes you just take losses and you deal with it.
Yeah, well, it hit the previous day's high at 22.37 and bounced right off of it.
Yeah, it is what it is, you know, and you just have to, you know, you gotta smile and grin it.
Yeah, grin and bear it.
Yeah, that's the expression. You know, so now I just gotta sit here and wait. Unfortunately, I have to sit on my hands and wait for the next opportunity. Or more likely, what I'm gonna do is say, hey, I got what I needed to get for the day. You know, it's one of those days where, you know, it's a rainy, cold day in Atlanta today. So go and do something else. Go have some fun. But we'll see what happens. I'll sit here for at least another half hour just to see if we can make it up. Don't know if we will or not. But right now, there's nothing on the table. I guess you could go long again. Could have gone long again at roughly right here. And the reason why is because you had all those bottoms there and it wasn't able to get through again. And you had a flip-flop box. But the problem was I was underneath the indicator too. That's why I didn't take the trade. You know, and the thing is, it looks like it really wants to go and break those bottoms. So that's the reason why I didn't take it. But you know, some people go and say, hey, that's a reason to take it.
Well, it's closer to the 25 than the 50, so.
Yeah. I don't really look at that much, but yeah, you're right. You know, there are a lot of players who do play it that way, and because of that, you get a natural draw in that direction. So, but right now, like I said, it's just meandering. Really, I know you probably mentioned this, but we only got like a 49 to 50 pip range for the day,
right,
which matches Friday. So, you know, we're right in range of what we're going to do. But the thing is, part of the reason why it's probably muted so much is because we got a lot of news starting tomorrow, Wednesday and Thursday, and then, well, actually Thursday is no news, but Friday is a lot of news, or some news anyway. So it may be just sitting here, just, you know, waiting to figure out what it's going to do based on whatever the news is that comes out. So who knows? But we'll just sit here and watch. And that's what our job is. 90% of my job is sitting in a chair, staring at a screen, going blind, staring at a screen, and hoping I don't get distracted by something else.
Yeah, that not being distracted or being focused, that's so important.
And it's hard, it really is. And, I wish there was an easy way to not be distracted, but there's just so many things. And the problem is, not only can you get distracted by things around you, but you can even get distracted by things on the chart. You start seeing things on the chart that you really shouldn't be paying attention to. And you wind up making decisions based on that type of stuff. And then next thing you know, you burn yourself. That line right here, for whatever reason, it was hard to get through it. I'm now on both sides, so it's kind of interesting that it's held. That line is held for some reason. It's got to be somebody with money there doing something. Or is that just a story? Gap down and filled the gap?
Yep, the stories we tell ourselves.
This is the boring part of trading, sitting here waiting. I think it's going to want to go back up to 34. But, well, that's only because we did have a nice candle drop over there. And the open on that candle was around 34.4. So a nice entry. I think that an argument for an entry could have been made for 32.6, but am I sitting here going in, looking for a reason to make the money up that I lost?
Well, let's see. We're coming up to that previous H1 low right now.
Got my 34. Oh, excuse me. And just so everybody knows, we're right now inside a M1 outside bar from 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candles ago.
Okay, there we go across the H1 low. Now,
and now if I would have stuck in that trade, the aggravating part, if I had stuck in that trade, I would have been able to get out right now at break even.
Oh, you got in the trade?
The trade I took earlier when you were going through all the.
You meant the one that you stopped out.
Yeah, the one I stopped out. If I would have stayed in the trade, I would have gotten out. Would have gotten out at break even right now. And that's the argument that here's a play that sometimes I make. Yeah, that went 5 pips against me. When I got out 5 pips. I think it eventually went 6 pips against me. But here's the argument that can be made. As long as you're not over leveraged, I would have had an opportunity to get in again and put a second trade in, average in, so to speak, or add into the trade, whichever way you want to look at it, at 32. And the first trade I would have gotten out with right at break even. The second trade I could have picked up 4 pips, and you just flushed the entire trade at that point, And the thing is, probably on a day like today, that would have been the smarter move. And the reason why is if you just look at the candle patterns over the last couple of hours, it goes and makes a move down like it did, at the beginning of the new 30, and moved down from where it opened. Let me